Good afternoon, everybody. Uneducated Economist. Got special guest Mike with us today. Now, Mike was in the was quoted in the Bloomberg article that we had discussed about how building materials are moving backwards through the supply chain. So I thought I would to kind of help explain what it is that's going on here. Mike, why don't you introduce yourself and introduce Materials Exchange?
So hi, thank you so much, Simon, for having me. I'm excited about this. One of my favorite things to talk about, lumber and supply chain. I'm not sure what that says about my personality, but we'll have some fun. Okay, so Materials Exchange is simply business-to-business e-commerce, or a business-to-business e-commerce platform. The unique thing about us is that the user interface has the look and feel and functionality of a financial marketplace. So why we put these two business models together is that lumber and structural wood panels are a commodity, and the price moves around as we found out in dramatic fashions this year. So it's important to have both sides of the supply-demand curve represented on a single platform for it to operate most efficiently.
So what would just kind of give me an example of like what would a transaction or what would like a business situation be with like you? What would happen?
So first, we should define who we have on our platform. To be on the platform, you simply need to be able to buy a minimum of a full truckload, which would be a semi-load of lumber, and be a consistent purchaser. So are we selling to home buyers? No, because they're coming in one time and done. Our cost to just get someone into the system is much higher than we'd ever make off of that person. So who is included in that on the buy side? You have, of course, lumber dealers, lumber yards. We have other wholesale distributors on there. We have large builders. We have industrial distributors and industrial users, like guys that would build pallets or boxes. On the sell side, it's distributors. Right, mill direct product, stuff that's coming directly from, the producing factory or producing facility. And what this article from Bloomberg highlighted, and what you've also touched on, seller or lumber dealers are also selling into the platform.
Very interesting. So let's kind of step it back just a little bit. Tell us what typically like a supply chain for lumber would be like. I work in the Pacific Northwest. I see log trucks. I have mills here. Now I see the log trucks go to the mills and then the mill produces, and I see that lumber going on a truck headed back to Portland. What's going on? Where does that lumber go? What would a typical supply chain look like for lumber? I know it's kind of, it's a broad topic, but, kind of give us an idea of what somebody would expect like lumber to kind of transfer through the supply chain look like.
I think the most important thing when you start considering the lumber supply chain is the mass. So when I say mass, I'm talking about just actual fiber, heavy, big product lumber and logs. It's very expensive to move that around. And you can't move that much around at one time because it's so heavy, right? So the traditional supply chain is one such that the wood moves the shortest possible distance to minimize the logistics cost. And that will maximize the return for both the producing facility and who's ever buying it, the end user. Now, of course, we don't produce lumber everywhere that it's used. So it will start to move these further distances. And then they traditionally use rail. So a lot of the wood, probably, I don't really know the exact number, but I'm going to say at least half of all lumber leaves its producing facility by rail and moves to a distribution point. So in Portland, that area, it's mostly truck, because you're right, you live in the middle of the trees, really. But for instance, in Chicago, where I'm at, it's almost all railed here, either from the Pacific Northwest or Western Canada or Eastern Canada, and actually Southern Yellow Pine gets railed up to here. So then you start, and then Chicago becomes a distribution hub. And the wood gets shipped via truck out of our distribution hub, out of Chicago as a distribution hub. The next stop on that chain is typically a lumber dealer who is going to package it into a much smaller unit, and it's going to be specialized for a project like a house or a remodel. So that's where your company would come in. And, you're selling a service, and that service you're selling is the fact that you're going to take in large quantities, break them down into small usable quantities, and deliver them to the job site. So let's just talk about highlight what I just said about the Chicago market. A lumber mill in the Pacific Northwest puts it on a rail car, ships it to a distributor in Chicago, who breaks it down into smaller but stays that normal unit that comes out of the producing facility, ships it to a lumber dealer, who breaks that unit open and repackages it into a job pack for the job site. So it's
so it's pretty straightforward how it kind of goes. I mean, it's just a matter of kind of distributing it from the locations where it's at to the places that it's not located. Like me in the Pacific Northwest, it's pretty like prevalent. Like lumber seems to be everywhere, as far as like the logging and the distribution of it goes. But still, we order it from Portland just like anybody else would, to come to my place. Now we can go to the mill and order it from them, but really we get a better price going from somebody else who's buying bulk of it than going and buying a small individual units, which they really don't like to sell anyway. Exactly. Right. So it's more of like, this distribution going through these hubs. Now those hubs, they can end up being quite large as far as, the distribution of the lumber goes. So like one of the videos that I had put out recently is because people were talking about the lumber shortage, is I went down to the local mill here and I took a footage of it, and it was stacked with lumber, right? They had lumber everywhere.
Yep.
So I'm like, okay, well, obviously it's not like these guys are shorting like production. They're producing as much as they can. I mean, the yard's completely full. Right? And then I got a lot of pictures and videos, and a lot of people were also showing this like all over the nation. They're showing like these major stacks of lumber just kind of all over different parts of the nation. And they're saying like, look, there's no shortage of lumber. And I thought, well, this is more of a distribution issue than it is an actual, like, you can go to one spot and see a lot of lumber, but that isn't necessarily what's going on across the entire nation with it. Because we had a supply chain breakdown. Now tell us about that. What happened during that supply chain breakdown?
So in the supply chain breakdown, people made decisions based off of the information they had at that moment in time. So we're going to back up 12 months. Our country is in a pandemic. The stock market is crashing. Nobody knew what to do. And what people do in times of uncertainty is they freeze and they protect what they have. That's exactly what the manufacturers did. They were basically instructed that you run your facility, more than likely everybody's going to get COVID and you're going to have a big problem. So they shut down. And there was nothing wrong with that decision. I mean, it probably was the right decision at that time, given the information that was out. What we didn't forecast is people get bored really quickly sitting at home. And then the majority, most people continue to get paid and still had money. So now they're not going on vacation. They're not going out to eat. They're not spending money, and they're stuck at their house, and they're sick of that deck, and they need something to do. So they go out and start doing projects. So this spurred what was the first wave that was blind to the mills and to most people in the supply chain. It's the repair and remodel wave. And I say it's blind because there's no way to measure it. We can look at housing starts. Wow, that's new home construction. We can make assumptions off of existing home sales. But the only real glimpse you get into the repair remodel is to take a look at how Home Depot and Lowe's are doing. And when you see their numbers really taken off and you listen to their earnings reports, you'll find out, oh yeah, wow, Q2 of 2020 was a blowout year for them. So now everyone was nervous. So they reduced supply, they reduced inventory. Inventory's flying out the door at the big box stores. And then people are like, well, I guess I got to leave the city. So then there's the next wave that wasn't as blind, but it hit the market without enough time to react. It was a complete reversal. Prior to March of 2020, there was a urban, people were moving to the cities away from the suburbs. All of a sudden, pandemic hits, urban flight, complete reversal. Not enough homes in the suburbs, too many condos and apartments. I just talked to a friend of mine who sold his condo. It took him a year to sell his condo here in Chicago.
Wow.
and he had 2 people look at it in a year. Now,
Wow.
you talk to people in the suburbs, they sell their house in 36 hours and have like 6 people looking at it. So you had the combination of factors, what the pandemic put in, the first blind wave, the second wave that was never anticipated, and you get this supply shortage. Like, we're using more than we're producing. But what you said's spot on. There's a lot of lumber out there. It's just all sold. It's all accounted for already. So we're just using more wood than can be produced. What I found fascinating about this was the inelasticity of supply, meaning, normal economics, prices go up, more supply should go on, demand should go down. Well, in this case, the prices went up and it actually started to increase demand because people started to race it. So, and supply just wasn't elastic, meaning it didn't increase. It didn't change. So then I'm like, okay, that kind of makes sense. Supply is going to take a little bit of time to come to the market. I fully thought by right now, this whole price thing would have worked itself out, but it wasn't elastic enough. And then demand, they just didn't care. And Stinson Dean, a friend of mine, made a good point. He's like, you go to a guy who's going to buy a house. The house is $250,000. The price goes up by $25,000 because of lumber costs. Now it's $275,000. Does he really care? No, he's getting out of the city. He's getting into a new home. It didn't affect him that much. You take a $25,000 increase in the price of a house and you amortize that over a 30-year mortgage. I don't know what the number is, but it's maybe $50 a month.
Yeah, pennies a day, really.
Right. So that surprised me. I guess I didn't look at it deep enough, but demand wasn't inelastic. So what has happened is the supply chain, the information didn't flow fast enough. The decisions weren't made, the right decisions weren't made quick enough. And we just got behind the curve. And then we discovered the inelasticity in our market. What has to happen is we have to get to the price point that it starts to make economic sense to not build. And I think that is going to occur more for the multifamily, the investment type properties, where they have money they want to put to work, but they're like, you know what, why don't I just wait 6 months and see if I can save some money? Because to them, they're not amortizing it over a 30-year period. They're trying to flip that property probably in 2 or 3 years. So if it matters to them more. Does that make sense?
Yes, it absolutely does. Something that that you were just saying there about the elasticity of the supply chain. I was putting out videos prior to 2020, prior to the COVID. It was the end of 2019. And I was talking about a lot of mill curtailments, shutdowns, and shortages taking place up in the British Columbia area. And shortly after that, COVID hit. And if it's the elasticity, the production of the lumber, that is the problem right now. That production line doesn't seem to be coming back. Like, I don't think that British Columbia, I mean, I know they still produce a lot up there, but did that really kind of throw the monkey wrench into the supply chain along with the COVID?
Yeah, it's crazy to think this, but it really was the downturn in 2008, 2009, 2010 that's causing what we have today.
Yeah, right.
Because it was a fundamental change in the entire industry where production was taken off. And they previously, the mills had a little bit more flexibility in how much their production. They would probably be running closer to 80, 85%. Well, we came back from that downturn and everything was just so flat that they got their production dialed in just perfect to like 95% probably. And the reason they didn't put any more production on in British Columbia is because the fiber basket when I say fiber basket, the price of logs in Southeast United States is the cheapest there is in the world, basically right now.
Right.
Now, It's not exactly the same product, and it's not a product that everybody may want, but it's definitely the lowest cost fiber available. And what you saw in the last 15 years is a investment from the Western Canadian sawmillers in the U.S. South. I mean, if you take a look at what Canfor and West Fraser, Tokel's in the game now, Interfor's in the game.
Yeah, they all moved down there. Yeah,
they all moved down there because they're sawmillers. They go to, they're like fishermen. If there's no fish in your pond, you go fish in your neighbor's pond, right?
Yeah. Go where the fish are.
So, and there's been articles recently about the cost of logs in the Southeast, why they're not going up with the price of lumber. And it's because the conversion capacity, meaning take a log, slice it up so it turns into dollars. They just don't have that, but it's coming on. Read an article today, Beaver Lumber just broke ground on a new sawmill in Mississippi. I don't know all of them, but there are many or several new sawmills. Binderholtz is ramping up the Klausner sawmill in North Florida. They have plans to ramp up the one they just bought in South Carolina. So production's coming back. It's just not even coming back. It's going to grow.
It's going to grow. Yeah. So, yeah, this is pretty crazy. So, let's talk about some of the crazy things that we're seeing now because of the supply chain shortage. Now, we talked a little bit in that Bloomberg article and stuff. We're actually seeing supply moving backwards through the supply chain.
Correct.
Now, this is incredible. This is something that I had never heard of. And when I read that article, it just like, I mean, I sat around and thought about it for like a while. I'm like, man, this is insane to think that, that this is happening. So let our viewers know what's going on there. What happened?
All right. I like to call it the eBay effect.
The eBay effect. Okay.
And why I call it this is because after eBay came onto the scene, right? A friend of mine went to a store that was liquidating some, I think they were sweatshirts or something. And he bought the sweatshirts from a retailer and sold them on eBay for a profit. Why did what was going on that he was able to do that? It was just a dislocation of the supply and the demand. But eBay, in its digital market wonderfulness, allowed him to do that, right? When you efficiently connect up the factors in the market through a digital marketplace, you have these opportunities. So that's what's going on in the lumber market right now. MaterialsXchange has simply opened up opportunities for buyers and sellers to get together without having the personal relationship that is traditionally required. And it unlocks demand, or it unlocks supply that previously couldn't meet that demand because they didn't know about each other.
Right.
So the digital market has turned every lumber dealer or anyone that inventories lumber into a distribution point.
Mm-hmm.
So while you say, oh, it flowed uphill or, went against the grain, I'm going to disagree. I'm going to say that instead of a supply chain now, we have a supply field.
Yeah, it's like a supply web.
A web. That's even better. A web of supply.
Yeah, I get it. Okay, I get it now. I understand. And it took that article and a little bit of here. Okay, now something very similar to this happened because I was talking about doing this videos with some of the guys, and I said, yeah, the supply chain moving back up, and the lead salesman said, yeah, that almost happened here. And I was like, what? And he was just like, yeah, when the price had dropped back in November, we had picked up 104 studs and nailed the timing on it. And we had a bunch of them. And then, of course, prices were going up and things were slowing. And so we had a stack of these things. Well, the guys that we had purchased them from were out. They were looking for them. And we had them. And they were offering us a profit to send them back to them.
Yep.
And we ended up holding on to them because we sold them, but we had that opportunity to actually send those things back up line.
Right.
So
two things have to happen. The market has to be moving very quickly. And the web, I'm going to use that, by the way, now. The web has to be in place.
Yeah.
Because if absent of either of those, you're never going to have it happen. Mm. If the market's stagnant, you're going to sell your product to your traditional customer who's paying you for your service, which is take in big bundles, undo them, put them into small job packs and send them out if you're a lumber dealer, right?
Yeah.
But now all of a sudden, crazy things are going, market's moving around, and you have this opportunity that you never had before. Now, there's a third factor in here, which I find really fascinating, and it's the dysfunctional way that our industry prices at the wholesale level in certain circumstances, which is price time of shipment based off of a reported price. So, we all know that there are companies out there that will report what they see the market price as. Third party, independent, they do exactly what they say they're going to do, with a high level of integrity. I like those reporting services a lot. But then we as our other industry participants to say, for reasons, and we all have our opinions why they do that, but they don't want to have the burden of actually deciding what the price is. So they put a contract and they say, I'm a supplier, I'm supply, your demand. The price is going to be decided by this third party. Well, what if that third party isn't accurately reflecting the conditions that are happening at my region or where I'm at? Basically, what I'm saying is there are people out there who are buying significantly under what is now accessible as a selling market to them. You buy on contract based off of what a report says. It comes in 20, 25% under where you could flip that truck that week. Why wouldn't you do that?
Sure.
Now, what's fascinating to me is that the real market isn't being picked up in some sort of report and being shown. And that's actually what MaterialsXchange will be doing very soon. As our volume of transactions pick up, we're going to start reporting the prices that happen on our platform, which, as we can decide if it's true or not in this conversation, those are the prices happening on the web, which is reality, in my opinion.
Yeah.
As opposed to the prices that are happening direct from a mill.
Right. Because these are now people like interchanging with each other on it instead of like going to some. Yeah, I totally get it. I agree. I agree.
So, you go to a mill and the mill's like, well, I've got 8 weeks of order file.
Right.
Okay. Does that mean that you're the market? I don't know. You're the 8-week market. I'm a lumber dealer and I've got an extra truck of OSB. How about I go to the market right now?
Right.
What's the market?
Right. Totally.
Is it an 8-week market? Is it a 1-week market?
Dude, I love this. This is brilliant. I love this. I mean, I love the whole material exchange idea, man. It's wonderful.
So I can give you perspective of how we got the genesis of our idea and what the digital market solves. So 10 years ago, I was the first guy. No, geez, it's 12 years ago, 2009. I was the first guy to walk onto the trading floor with a computer. And when I say the trading floor, this is the Chicago Mercantile Exchange. Actually, we can back up. Let's back up. Year 2000. In Chicago, we had 2 major exchanges and 8 trading floors. There were probably 10,000 people that worked on these trading floors. And you could have one pit, like the S&P 500 pit. There would be different prices for the same exact product all over that pit. Now, they very efficiently traded the, that futures contract, and they did millions of contracts a day in that pit, which was nothing short of remarkable, but it wasn't perfect and pure. Meaning there wasn't just one price happening at all the time. There were, some prices over there, some prices over there. And another friend of mine, he used to stand in the middle and he would arbitrage. He'd hear it's low over here, he'd buy it over here and sell it over there, or sell it over here and buy it over there real quick. When it went digital, that whole opportunity as a floor trader went away, because while the computer screen looks pretty chaotic and the prices are moving around really quickly on there, there is only one price at every instant in time.
Yeah.
So I hope I didn't lose you too much on that.
No, I think I followed it.
it's no different than, let's, talk about if there's 10 lumber dealers in a city, right? There's going to be different prices kind of all around that city for 2x4, 104 and 5/8 studs.
Yep.
And if there was basically one lumber dealer or one central clearinghouse, there probably would be one price for that stud around the city.
Right.
Hi, this is Mark.
So yeah, that's basically how the digital market
Sure.
makes things more efficient. But what I love about it is that it opens up the opportunities for people to sell and take advantage of a market move that they have experienced.
Totally get it, man. Well, I'm not sure what else to try and pick your brain for, man, because there is so much that you have already filled us up with here. I just guess, like, what do you think, like, if I was to ask you one more question about like the futures market and stuff, we're trading at 14 per thousand, and I was noticing the open interest contracts. Can you explain that? Like, I saw them like 2 weeks ago at like 1400, and now it's at like 800. What's going on there?
Well, I think what you're looking at is what they call the front month futures.
Okay.
So that's the May futures contract, which is going to expire on May 15th. So the reason it's called a futures contract is it is a contract for a future delivery. Now, come May 15th, it's no longer going to be a futures contract. It's going to be a real contract. Someone's going to buy wood. Someone's going to sell wood. So what happens is the number of the open interest of people participating in that month, they exit their positions. They do that by, rolling it to another month. So if you're long a May futures, you would sell your May futures and buy a July if you want to stay in the market, or you just sell your contract outright. So that's why I think what you're seeing is the front month contract. The number of people participating in it starts to shrink, and then it grows in the second month. But I do believe that the overall number of contracts in all of the expirations, you got May, July, August, September, November. I think it's going down slightly, but not too much.
Okay. I was just curious about that because I was watching, and some of these things I'm not quite aware of what's taking place.
I worry about that when I send out.
My tech guy didn't turn off his mic, so we got him kind of interrupting us a little bit there.
I wonder if you think we can mute him?
I don't know. Can we get him out of there? I'm not sure because he's hosting.
Yeah, he's the host. That's all right. It's a nice informal discussion, right?
Yeah, and that's kind of the uneducated economist style anyway. So it's cool.
So let's just revisit what it really means though to sell on MaterialsXchange or a digital market. And there's some really cool things about it, and then there's also the prices that you're going to get are not reflective of the service that your business is probably designed to provide. So a cool thing is you get paid right away. Like we pay 24 hours after the truck delivers to the end, whoever the counterparty is, which is great. But you're not going to get paid for building a job pack, right? So the prices that you get are more reflective of wholesale distribution prices, or even mill direct price. So, one of the disappointing things could be, I sold a bunch of trucks, made all this money. Now I need to go back in the market. And when you go back to the market, you have to pay more for them. But
right. But it's still, this is like, I just love the way this works because like nobody knows, like a lumber yard, there's no information, like unless you call the lumberyard and say, hey, how much you got? There's no way of telling like how much a lumberyard has on hand.
Right.
But this gives a way that a lumberyard that says, oh man, like if they happen to have like been in a panic buy, like, it's just like, oh no, you're not going to get any OSB. And they just loaded up on OSB, but now you can get CDX cheaper and the OSB seems to be sitting, but you found somebody out there who does want to buy OSB. This is given that way of like all of a sudden making that transfer starting to take place. And we've never had this before. I'm just like, my mind's still trying to wrap around like what this could look like as it grows and more people are involved in it.
Oh yeah.
I mean, it's just amazing. This is an
Right.
amazing way. Like, you don't even really need to be like, ultimately, you just need to be a guy with land and a lot of money, and you can make this happen, right? I mean, you can buy
Absolutely.
and sell lumber right off of, and not even just be a
Correct.
distributor in the middle of nowhere.
Right.
Yeah.
It lowers the barrier to entry. It
Yeah.
lowers it to almost zero for the selling side. It's a digital interface. You pull it up, that's the bid. Do you want to sell at that price? Yeah, you click, sell, you're done.
Done.
So it's very similar to what happened in the financial markets when they went electronic. You know, prior to, let's say back in the 80s, if you wanted to go buy, 1,000 shares of Ford, you had to have a stockbroker, and you basically had to sit down in the special office at the bank and get your money moved over. Like now, pull out your Robinhood, boom,
yeah.
gone,
done.
And
wow,
that's what we're doing. I mean, that's the beauty of it.
Amazing, Mike. If I got to cut the video down now because I got to get going, man. But I just love this conversation. This was brilliant. If somebody wanted to get a hold of you, how did they get a hold of Mike and Material Exchange?
The best thing to do is go to our website, MaterialsXchange.com, and register there. Then your information is going to go to the proper people. You can reach out to me, Mike W. at Materials Exchange. I'm on LinkedIn. The way I look at it, if you can't figure out how to get in touch with me in the year 2021, maybe the digital market's not for you, man.
that's it, man. That's so true.
And it's, I hate to say it, but that's
links down in the description. So.
Yeah, not a problem. I think we should talk again in like 6 months or 4 months and see, what's going on.
I love that, Mike. That would just be great. I know this is going to be a really popular video with viewers out there. So yeah, I know they would love to hear an update on how Materials Exchange is growing and what they're doing. And yeah, I'm excited. I'm excited to see what things go like this.
I can leave one little nugget of gold that I've experienced in my, I've been in the lumber industry for almost 30 years. 27 years. And this is no fault of the suppliers, but when markets move like this and order files start to extend, no supplier sells 100% of their production because they need to leave a little bit of leeway in there in case things go wrong, because they always want to do the right thing. They want to ship on time. When markets start to turn, order files come in a lot quicker. And then people are still buying under contract and based off of a reported price. Well, if all of a sudden that reported price doesn't look so hot anymore, and maybe they don't need more inventory, they cancel their contracts. That contract wood goes back to open market, and it becomes the supply grows exponentially.
Right. So all of a sudden, the little bit of inventory that the mill has left over is all of a sudden a lot of inventory because these files, these orders that have been placed are now pretty much non-existent.
Yep.
So all that sold wood is not really sold.
Right.
At that point. Wow.
So, it's the market's fooled.
I got to think about it for a minute.
No. The market's fooled me a couple times already on this move, but boy, it's a hard time to think this is where you want a yard full of lumber at.
Right.
I don't know. I think the next 3 months, this quarter 2 of 2021 is going to be some interesting times.
Right on.
And what's fun is we at Materials Exchange, we see this like real time right in front of us, these orders coming in and transactions happening. So that's, if you want a front row seat, get on Materials Exchange and you will see the front row of what's going on in the market.
Yeah.
So,
awesome.
All right.
Thank you so much. Thank you for your time. I really appreciate it.
No problem, man.
Economist, you guys let me know. Any last words, Mike, at all?
Go Cubs.
Go Cubs. All right, buddy. You have a great afternoon.
All right. Take care.